Okay, good afternoon, everyone. Welcome to our market outlook for fourth quarter. And myself, Loui Low, will be going through with you on this quarter's picks and also sectoral picks. But what is interesting is, right, we have already issued this early this month. This report was out navigating the weak ringgit and high interest rate landscape. But there are two events that happen throughout this scenario. After we have issued the budget was out last Friday, and that was 7th of October, and our 9th PM has actually announced, to dissolve the parliament, and that is on the 10th of October. So basically, you can say that we have issued this report, and we are anticipating that to happen. But at the same time, after our budget report being published on 8th of October, we can consider that as to be voided for now until the next three readings after we have formed a new government. So basically, we can say that this event, the budget being tabled and budget being voided as of this juncture may be a good thing. Why do I say so? It's because this gives us a very good advantage of buying some counters at a dip, because under this scenario there is a dip for us to buy, and we have to grab the opportunity to buy into some solid counters. So this quarter we have selected some sort of solid quarters to anticipate things to happen, which is one of them is the budget on the 7th, and we didn't know that election will be coming so soon this quarter, but at least for the next 60 days they can call for an election. So that is some good thing that we need to settle on. But short-term pain, long-term gain. So the short-term wise, definitely like today itself, you can see that the market is actually tanking, but it is slowly recovering. I'm pretty sure that when we have two things, one is the dates of the election, then we will be sort of stabilized. Then we will be seeing uptrend again. And second thing is that after the election, once there's an outcome, the market will stabilize further. So these are the two ingredients that we need for this quarter, so that next year will be a better year ahead. Okay. So before we start, just give you some new user guide. You can go to our website to do some account registration. Our M Plus research report is always there. It's in our M Plus online blog. Weekly market update, we have it on every Monday, unless like today itself. Yesterday is the holiday. Today we'll do a briefing or do some market webinars. Then we have weekly bites, which is every Wednesday we will post some new updates about the midweek review. And do subscribe to our M Plus Online TV, YouTube, and also if you have anything else that you want to contact us, need help, need assistance, you can contact us at support at mplusonline.com.my or PM us on Facebook. Okay, so this is just to do some disclaimer to say that everything here is my opinion, and I would think that you have to take the opportunity to look out for your investment advisor to make sure that you have get informed decision before you make any decision down the road. Okay. So before today I was having just 6 of the pointers only, and after yesterday we have to add in budget 2023 and also G15 to emphasize on what is happening in that two events. And yeah, but again, my strategy is always fitting to the current environment, and also the stocks that we have selected is some sort of good in terms of their fundamentals. So it should be able to weather through this this environment, with or without this GE15. Okay, so that is the whole intention of stock picking at the start of the fourth quarter, and that is the reason that I will always put out some counters that is within the team, within the factors. Okay. So post COVID environment, I just want to briefly go through whatever that I can go through in market outlook, and we'll just try to pinpoint to where are the growth coming from, and where should we put our money into. Okay, so for instance, post COVID environment, we are looking into some Malaysia COVID-19 indicators, although not many people will be looking at it, but just to give you an idea that the current position is definitely on a declining trend. Everyone is treating this COVID-19 as a normal flu, and we are not supposed to be focusing anymore on this COVID-19. But again, just to give you an idea that the trend is coming down, coming off, therefore it gives rise to a potential tourist arrival, going forward. So since April, we have seen that, and that has contributed to a very strong quarterly GDP. So these are the three things that very important for post-COVID-19 environment. We need to see whether we have passed, go beyond the COVID-19 environment or not. First of all, if yes, then we need to see where where will be the tourists spending money on, and is it a good growth in terms of GDP. So if these are three things that is all being checked, then therefore we can say that Malaysia could be a potential beneficiary out of this post-COVID environment, and we should be putting our money into several sectors. Okay, so let's go through one by one. So generally speaking, we are looking at a softer trend in terms of all these indicators. So patients being ventilated is down, ICU also down, the being tested positivity also down, and most of the things are down. So basically, what we are trying to say here is we have an opportunity of we have certainly gone past beyond this COVID-19 environment, and we are likely to go into a next chapter, next era. Okay, so it will not, we will not focus a lot of this COVID-19 anymore. It will be a normal flu, and therefore it gives rise to the recovery team going forward. So next thing is we have the tourist data from the immigration department, or the tourism ministry, and it is showing us that very significant growth. Okay, so it is already back to sort of near towards the COVID outbreak period, and also we are potentially hitting maybe 1 million mark by next month. So going forward, we are likely to see if it can goes beyond 1.5 million per month of tourist arrival. Then that is a very interesting thing to take note, because those will be contributing to the tourism and consumer and services sectors. So those like BJ Food, or even whatever that is related hotel industry, they are part under services. So tourism services industry will benefited under this scenario. So if you say that GDP for the second quarter is already growing at 8.9%, what about third quarter, that more and more people are coming into Malaysia? So that is definitely a good opportunity to position yourself ahead of the GDP data, which is coming out next month. So definitely the data would be much stronger, or somewhat similar to 8 to 9% growth year on year. Okay, so next is we talk about GDP growth. So 8.9% is definitely second quarter GDP growth. So moving forward, can we also get that? Yes, I would say that it will be somewhat similar or even stronger. Why do I say so? Is because if is actually against 366.2 against the 336.1. So in third quarter, 336.2 is quite similar to 336.1. And if the tourist is coming back into Malaysia at a stronger pace, then this number following quarters number will be slightly similar or stronger than 366.2. If you compare that to 336.2, then that is somewhat the growth that you can anticipate. So and bear in mind, third quarter as well, we are seeing some of the tech counters are still having some good exports data or exports earnings, and we are also in sort of benefiting position, because our ringgit is on a weakening path. Currently is about 4.5, 4.6. So it can still continue to go even higher based on the trend right now. Okay, so that is my idea on the post-COVID environment. But external wise, externally we are also being, we are also faced by various things, such as um, the Federal Reserve continuing with its hawkish stand, and that is actually not so conducive for the market. So at this current moment, Federal Reserve is expected to continue to rise, hike the rate until maybe potentially 3.8 or even 4.347. So this is based on consensus numbers. So basically, we are likely to hit 4 to 4.25% by end of the year. And bear in mind, the peak period will be in maybe in March next year, 4.65, then come off 4.63 until 4.3 by 2024. So basically, the hiking direction is still there until March, based on consensus, until March, and after that only it will dissipate. Okay, so what I'm saying here is that the hiking process is still ongoing, and the market, the consensus is also thinking that the process of hiking will continue until March before it fizzle off. So that is the idea. Then next we come to a Federal Reserve viewpoint. What does the Federal Reserve say on the end calendar year interest rate? Okay, so if you look into this green line here is the median. Okay, so median means the median path of the officials, the Federal Reserve officials has been commenting. So if you look into this chart here, basically it tells you that the 2022 end will roughly be about 4.2, 4.3. Then, sorry, 4.25. Then the next year, ending part of 2023 will be higher than 4.5, maybe 4.75, before coming off to 2024, which is below 4%. So that is the direction again. So it's somewhat, consensus is actually using the dot plot to make a consensus view about what is the market thinking on the top dot plot. And the dot plot is also saying that it should be peaking by 2023. But again, later on I will be talking about another part whereby if you're looking into the CPI numbers right now, CPI numbers has not been coming off. So the question is, where is the peak? Okay, where is the peak for the CPI numbers? Okay, so if CPI numbers is still pointing upwards, will the Fed continue, to position themselves in hawkish or dovish stance? Okay, so what do you think? Maybe you can do a poll here. Do you think that the U.S. Federal Reserve will increase more than 75 basis points in the upcoming meeting? Okay, so do you think that, because after you have go through all these slides until now, do you think that Federal Reserve will increase more than 75% in the next meeting? So the first answer is yes. The second answer is no. Okay, so let's do a poll here. Then we will go through. Then we will come back to the the poll results, and let's see whether does it justify or does it in line? Is it in line with our expectation, or is it not in line? And what are the reasonings? Okay, so CPI numbers has been going up. So, which means that if CPI numbers is going up, therefore most of the central bankers will need to stop, or push the inflation lower, and that is contributing to a more hawkish stance. So they need to tighten their monetary policies and things like that in order for people to stop. In order to stop the inflation going much higher, okay, position. So they did mention, Federal Reserve did mention about this situation whereby if the inflation is going up higher and higher, they are committed to bring down inflation to 2% at all costs. Okay, so that is the commentaries that given by them during all these meetings. Okay, so what will happen to the stock market if they are going to bring down the inflation at all costs? Okay, think let's do a if you are Jerome Powell, if you want to bring down this inflation to 2%, first of all you need to increase the interest rate, right? Then if the data is showing that the CPI numbers is still going up, inflation numbers is still going up, inflationary pressure is still up, what should I do? Okay, so my idea is that if they can't really stop the CPI numbers due to several reasons, because right now there is Ukraine-Russia tension. There are oil price still maintaining at above the $90 per barrel mark, and all this supply and disruption throughout the supply chain disruption throughout era until right now is still not being resolved. Softer, growth in terms of the China growth, and also China is not producing as much goods for the rest of the world. So all these are actually contributing to this situation of high inflation. So if I'm Jerome Powell, if I cannot really control by then, what should I do? I might shift the goalposts of, don't, I wouldn't use the inflation target of 2% anymore. I might use maybe the inflation target will go down to 6%, I'm happy, or 4%, I'm happy. So there is a chance whereby if they can't really control down the road, then they cannot be increasing the rates forever, right? And the idea is that they might, shift the goalpost from 2% to maybe 4% or 6%. So that is a very realistic target. Then yes, perhaps that will actually ease the stock market, and the stock market might have a rally. So my idea is that right now, yes, they are, at all costs they want to bring down inflation. But what if they can't bring down? What would they do? So that is my idea of, if they can't bring down, they might as well move the goalpost higher so that it will hit. Okay, so that is just something to ponder. Yeah. Okay, maybe you can get back the the poll result. What is the poll results like? And maybe we will see. Okay, so the voted yes, there are 63%. So there are like 2/3 of you all, the audience, are thinking that more than 75%. Yes, it is possible. So if more than 75%, then it will be 1% or even 1.25%. So it depends on the CPI numbers. So CPI numbers, if it is still continue to be elevated above the 7 to 8% mark, I think people will continue to perceive that the Federal Reserve will continue to maintain hawkishness above the 75 basis point. Okay, so next thing is that they are tapering the liquidity. So since June and September, they are already tapering. Since this part of the day, yeah, you can see that slowly it is turning down the liquidity. So it means that there are not so much of liquidity in the system, although there is still a lot, but they're trying to put this down, tone it down, so that people will not continue to lend and push up the asset prices. So be it property prices or be it whatever it is you can think of, they are trying to cool down the economy for the time being. Okay, so so these are the tapering schedule that we are going to anticipate. Okay, so that has contributed. Okay, so that increasing in terms of rates has contributed to this very strong US dollar index. And US dollar index has been hitting 20-year high and may continue to hit even higher towards 120 even. So what I'm saying here is that as long as the direction of the interest rate is going up, this will continue to go up, and until they turn into less hawkish or more dovish tone, then only we'll see a pullback in terms of US dollar trend. So dollar basket will continue to maintain upwards until either Jerome Powell state, I will be pausing, I will be stopping the interest rate high, I will be moving the goalpost. Yeah, all these are going to contribute to the turn on the dollar index. But for now, it is definitely on an upward move. Okay, so next we talk about commodities. Okay, commodities. I think all in all, people are thinking that when commodity prices is coming off, it is it is good for CPI numbers. Last month, it it did not come down, because if you drill down to the CPI numbers, actually the CPI numbers higher weightage is on the shelter, and shelter means the property market, or the property the rental and things like that. So even though food and also energy prices is coming off, but actually shelter price is going up. So what I'm saying here is that we have the view that commodity is coming down, but that is not the main culprit of CPI right now. The CPI is actually relying on higher weightage of the shelter. So which means that even though this food and energy prices is coming off, but the shelter price is still going up, it will not change anything on, or I would say that the the inflation will still be quite elevated at 7 to 8% range, or even 6 to 8% range. So definitely right now, the commodity is not really the main culprit, but actually the shelter is actually the main culprit for CPI numbers. So, but again, we want to emphasize on commodity is because going forward, we will need to pay higher cost for whatever things that we buy, because main commodity, the main commodity under this commodity index is the gas and also the oil are actually trending higher. Although the rest is actually down. Why is it trending higher on oil and also gas? Is because the ongoing Russia and Ukraine tension. Definitely, this is part and parcel of this tension. And will you think that inflation rate will go down for going forward? I would say that my view will stay the same as what I've mentioned in the past quarterly market outlook. It will stay elevated for the rest of the year. Okay, for CPI numbers, yes, it would be saying around 6 to 8% for the rest of the year, and also for commodity index, it will be staying around 100 to 120. Given that this tension has been erupted, or outbreak, or whatever you want to call it, it is no end to this the war, and hence the risk premium towards to price this premium, we are pricing it into the oil prices. And oil prices did not fall below 90. If you track back, 85, 90 is the support of the breakout earlier on. So which means that everything started from Ukraine-Russia war. Right now will be above Ukraine-Russia war position. So that is for oil prices. So if you think about all this scenario of inflation, of higher commodity prices, higher interest rate upcycle and kind of things, what is next, in terms of the US GDP numbers? Will it contribute to the recession? Okay, so over the past, few arrows that we have drawn here is actually the 2 consecutive quarters of GDP. Therefore, we are saying that right now there is a second consecutive quarterly of a negative or contraction in terms of the GDP. So will it contribute to recession? Because right now they are saying that right now it's not recession because it is just called a technical recession. Until all the other numbers are coming off, we only can mention that it's a recession. But given that scenario of higher interest rate and all this inflationary pressure, people are actually anticipating that earnings of the corporates are coming off, and it may continue to drag the economy going forward. Everyone is slashing the headcounts in all this. You can call it the unicorn or startups. They are actually slashing. Even Facebook Meta is actually slashing the employees, the headcounts as well. So basically, what I'm saying here is that they might be the pre signal of the potential slowdown in economy going forward. So I'm saying here that right now we are in technical recession. We are not too sure whether it will give us a recession call being called in the US, but assuming that they are going to call a recession, I would say that that is a very good opportunity for you to buy in, because when they call the recession, definitely it is sort of likely to be bottoming progress by then. Okay, so just give you an example of indicators or predictors that you can actually use is the inverted yield curve. When in this, the inverted yield curve is below 0, it means that there is a very good chance that in the next 6 to 12 or even 24 months, the economy will be in a recession. So during this period, 2006, 2007, it is inverted yield curve, and 2008, 2009, it is where they call it the recession. Okay. Then again, 2019, we have also an inverted yield curve, a very glimpse, blip below the 0. And later stage in 2020, we also ended in a recession, 2 quarterly contraction in terms of the economy. And thirdly is about this, recently, we are actually in the inverted yield curve. Although, in March and also in May, we have a very, very brief below 0, but right now it is actually inverted since than June. Okay, so basically what I'm saying here is that there is a very good chance, based on this indicator over the past 3 to 5 times, there are a very good chance that economy might hit the recession. Okay, but again, once they announce it is a recession, try not to be afraid, because those are the times that it might be a very good opportunity to pick up shares. Like 2008, 2009, they call it at the bottom. When it is recession, they call it, then the stock market rebounded from that point onwards. Okay, so yeah, just give you a quick idea about that. And okay, so consensus view on our next 3 years is still positive region in terms of all these economies in the world. US, China, Singapore, Hong Kong, South Korea, Malaysia, all are in a positive region. Just that Hong Kong is in a slight negative. This is based on consensus view, but I believe that our side is on the high side, is on the high growing path, which is near to 7%, and near to 4 to 5%, 4-ish% for the next 2 years. Okay, so that is the idea, the consensus view of the market right now. So just to give you a market review, that whereabouts is the market right now on the year-to-date basis. Most of the sectors, or most of the nation or benchmark indices are actually in downward trend, and except maybe for Singapore it is still slightly negative, below zero for a year-to-date basis. So it is considered as sideways ranging for Singapore. I think Singapore is more structured in a way that they are still able to generate growth in terms of the economy, and they are still able to weather through all this situation, because they are just a trading hub, and yeah, some manufacturing segments is there, but basically STI is focusing on more REITs, more property, more banks. Okay, so these are some of the sectors that is heavy on the STI. So for Bursa Exchange, what is actually what is actually the year-to-date gainers? There are none for now, because everything has moved below 0% on a year-to-date basis, except maybe for plantation sector is still slightly flattish around that zone. Maybe property sector. Okay, so there isn't much to talk about the Bursa Exchange performance, because this year wise it is some sort of negative. Okay, so yeah, Brent oil, just as I mentioned, because of this Russia-Ukraine war, and also the Biden policy being more green, therefore the capex spending in oil and gas is not that many. It's not that much throughout past few years, and therefore that is contributed to supply issue on oil prices. So which means that we are very bullish on oil prices, and that is actually one of the good signs that you can actually put some eggs into oil and gas counters going forward. And perhaps if once this can cross above the $100 mark on Brent oil, then we can hit further upside on most of the oil and gas counters. Okay, so I'm still having a view that Brent oil price is still up, and likely we can tap along with the trend going forward, at least maybe in fourth quarter or even in first quarter next year. Okay, so CPO price is being forced down due to Indonesia, pumping out, forcing out more and more of the CPO in the market, and that is contributing to the very heavy sell down since 7,000 and above. It sell down towards 3,005, yeah, and the lowest recently is around 3,001. So basically, we are seeing being slashed more than half of the peak. It is not the same as crude oil, because they have a lot of reserve that can be flushed in the market and hammered the CPO price down. So that's why being hammered very severely, and therefore there is a change of dynamics since then. So moving forward, what we are seeing right now is still range bound between the 3,001 towards the 4,005 range mode. Okay, so that is the idea here. Gold, a lot of people say that it's inflation hedge kind of tool, but somewhat it is not true at this current moment, because everyone is flowing into US dollar, and US dollar is actually inverse correlated with gold. When US dollar is up, gold is likely to go down, and therefore when US dollar is going up so much higher, 20-year high to 20-year high, Therefore, it has contributed to a very negative perception on gold prices. That's why gold prices, even though under this Ukraine-Russia war, it didn't move above the 1,008 or even 2,000 for a very long time. It's just a glimpse whereby it just break out above the 2,000 and straight away it plunged down. Okay. So next we go into market view. Let's market review. Talk about how cheap is cheap in terms of the world index, in terms of S&P, in terms of FBM KLCI. So MSCI World Index is actually at 15 to 16 times PE, and the 10-year average is at 20 times. So basically, if you look into this range, it is most likely potentially the bottom phase of this area here. When it's going down below the yellow color line, it could be bottoming out range. But I would want to see it goes down to even further, around 13 to 14 times. Why is it so? It's because during a crisis, normally it will stand along the 13 to 14 times PE before it rebound higher. So for instance, MSCI World currently is below 16.3. It may continue to drift lower, but maybe towards 13 to 15, then it will rebound higher from that point onwards. So that is the idea here. Because 208, when S&P 500 also traded towards that level, and we can see that there is a very good significant of rebound from that point, and but basically it hit a V-shaped recovery, or they hit that 13 to 14 times PE, then it stabilized, then it recovered. So 13 to 14 times seems like something that is decent for you to buy at that valuation. So basically, what I'm trying to say here is that S&P and also this MSCI World Index may not already hit the bottom, but they might hit the bottom near towards that valuation. So that is just my observation so far. Okay, and second thing is that coming back to KLCI, well, outside we are still all this while being below the 10-year average of 17.7 throughout the past 2 years. And right now we are nearing towards the one standard deviation lower than one band lower than a mean, which is near towards a 15.6 times PE. So basically, we are considered as cheap, discounted at based on 10-year view. Normally, we should be trading around the 17.7 mean during good times, during normal times. So basically, right now, people might be afraid, so that therefore they are pricing in a recession fear. So that could cause a potential sell down in the near term. But overall, in general view, they should mean revert back to 17.7 or at least 17 times PE. Okay. So technical analysis perspective, we are hitting somewhat a quite negative trend right now. But I would say that the current position might be oversold for us to buy in. Why do I say so? Is because later on I will share with you my view on the current movements, because I would think that once we are able to clear off the election event, then everything should be another 5 year. Perhaps if there are 2/3 majority in the government, there will be a more certainty. There will be more certainty in terms of policy changes, and that we can expect further upside for KLCI. So for now, definitely we are hitting some support near towards 1371, 1393 area. But going forward, we are likely to see further upside once we have the date. First of all, the election date. Second thing, the outcome of the election. Then we will be able to see upside towards the stock market from that point. Okay, need not to say much. Small cap is also downtrending. So perhaps if you have been holding the stock since last week, right now might be turning slightly negative because of small cap index. It covers more than 700%, and right now it's still likely downtrend ahead of this G15. But there is some light towards the end of the tunnel. I would say that this opportunity of the dip recently could be an opportunity for you to buy ahead of the event of GE. And secondly is that we have also the window dressing at the end of the quarter. Okay, so ACE market is still downtrend. Need not to say much. You need to cherry pick your stocks going forward in the ACE market. Definitely, it's one of the place whereby it is having a lot of high risk counters, because those counters are negative in terms of their earnings, but those counters that are decent in terms of earnings and still can grow in terms of their earnings under this ACE market, you should be cherry picking them, because the catalyst from ACE market to the main market is a new catalyst for ACE market stock. So that's why if the earnings are growing, you can actually cherry pick and buy into them and monitor them for the transfer listing. Okay, so I need to do a poll here again, because right now our US dollar MR trend is actually on a weakening bias. And when we talk about this, it is uh, very fearful that whether this Ringgit Malaysia can even hit even higher or even weaker position towards the 4.7 or even towards 5. So let's do a poll here. Would you think that our US dollar MIR chart is actually hitting potentially towards the RM5 per US dollar mark? Based on I want to see what is the audience looking at. How do you look at the US dollar MR trend? So maybe we can do this poll right now. Then perhaps we see how many of you are in tune of seeing the Ringgit Malaysia going into 5, or it is not going to 5. So let's see. Let's do a poll right now. Okay. So let's go into another slides before we come back to this poll later on. Okay. So after we have all this set up, like inflation, the crude oil prices, the very weak Ringgit Malaysia tone, how we should be positioned ourselves for fourth quarter, it is very tough, right? I mean, under this inflationary pressure kind of environment, where should we put our money into, or should we, should we really limit ourselves just to invest 50% or even full force into investing, or you prefer cash is king? So after this poll of Ringgit Malaysia, let's do another poll on what is your strategy right now. So I want to understand what is your view on the Ringgit Malaysia trend. So maybe Kay, yeah, you can actually put up the results for me on this Ringgit Malaysia. So let's see what is the tone of our audiences on our Ringgit Malaysia trend. Okay, let's wait another maybe 5 to 10 seconds, see how it goes. So the next question I want to pose is on this strategy. What will be your strategy into fourth quarter or even after fourth quarter? Will you continue to invest full force, or will you continue to stay partial invested, or will you consider cash is king, so you have no investment right now? Perhaps that is your view. So I just want to understand. Then we'll come back to you after I explain all this strategy. Okay, so just now the Ringgit Malaysia is more than 2/3 is saying yes, to Ringgit hitting 5. I mean, I'm not saying that I'm happy on that, but at least we are in the same view, which will we will confirm some sort of investment strategy in fourth quarter, because Ringgit Malaysia, when it is on a weakening path, therefore you can actually look into export-oriented counters. So that is part and parcel of our fourth quarter, one of the theme inside. Okay, so fourth quarter strategy itself. So recovery team is on the cards, definitely. We are looking at full reopening of business activities and travel borders. Malaysia GDP data has gained momentum in second quarter, and therefore we look into consumer-related companies as to have decent growth. So we will favor tourism and consumer segments. So that is quite clear cut in terms of this strategy. Then secondly, a weak ringgit position is part and parcel of our team for fourth quarter. Because of the Federal Reserve has not been stopping or pausing in terms of the monetary policy, therefore dollar index has continued to rally, and Ringgit Malaysia has declined more than 10% year to date. In terms of the strength, it has declined, contributing to higher overall input costs on the domestic counters might get a hit, but it will benefit those that on the export oriented. So maybe they buy their raw material in US dollar, they sell in US dollar, so that is considered natural hedging. But if they do it in Malaysia, then sell it abroad, that is benefiting them. So those are like plastic industry or some technology stocks. Okay, so we favor export oriented definitely. Then third is high interest rate environment. Yeah. Okay. So yeah. Before you go to the next slide, I think the next poll is about what is your current trading strategy. Yeah. Is it fully invested, partially, or cash is king? So later on, I will, after my slides here, I will talk about that poll result. So under high interest rate environment, I think we can think it in a viewpoint whereby if your company is actually having a lot of borrowings under US dollar or under any currency, because right now everyone is increasing their interest rate, right? So basically, if you have borrowing, means you have to pay higher interest rate. So therefore, we will opt for stocks either in the high net cash position, low gearing, or their stable dividend track record in terms of their payout, paymaster. So there are a lot of companies under Malaysia is still having this kind of good fundamental, solid fundamental, but just that the liquidity is not that much, but they are willing to pay you at least 5 to 6% per annum in terms of dividends. Although it might not be so attractive compared to M3S maybe at 3 to 4%, but still they are having solid net cash position. They are having a healthy dividend pay track record throughout the years. So why not, right? So under this environment, you can opt for high net cash, low gearing, and stable dividend track record counters. So the next strategy that I can look out for will be high backlog orders in terms of automotive segment, like during June, we have this SST being expired, SST exemption being expired, and people rush to buy in. Then that would contribute to the deliveries. When they deliver, then only they will park under their earnings, and that will see a good jump in terms of earnings potential for those companies. Okay, so automakers, automotive related companies such as leather upholstery or car accessories definitely is part and parcel of our strategy, because we are anticipating the earnings that comes in during November will be much stronger in terms of their growth, and that should contribute to a potential trading opportunity for the near term. Okay. So I have summarized it into factors, elements, and theme for fourth quarter and 2022, because I think this kind of strategy will need some matrix to it, because we want to know that what and why do we choose this counter. Okay, first of all, sectorial wise, technology, consumer, construction, chemical, automotive, solar, um, furniture, plastics, and telco. So those are the sectors that we have selected. Why do we select it? Because of the budget, because of GE15, because of their export oriented, because of their resilient orders and demand, they have shown in their prospects. Either they have strong order books, they are record order books, or they have been quite sustaining in terms of their earnings trend. So those are the things that we want, and we have selected them, and we have put under this matrix. So which means that it gives us an idea or sense where we are heading, where we are putting our our money into, which sectors and things like that. So we have selected we have selected this just ahead of the election, and budget team and also GE team is part and parcel of my fourth quarter factors or elements, or the team. So under that team, we have Gamuda, we have MyAG, we have Optimax. Optimax is because we think that higher medical, what do you call it, Ministry of Health allocation will actually benefit medical sector. Then PECA is related to G50 team. Then Semidance Comnet is related to budget, and Timecom is related to budget. Okay, so those are the ideas behind it, and why do we put it in is because of all these factors, elements, and also team. Okay, so that is just an idea. Okay, so I've stated my sectors, I've stated my strategy, and what is yours. So let's take out the poll right now to see poll result. Let's see what is the current trading strategy of the audiences. Okay, so fully invested, wow, only 10%. So 10% is only fully invested. Partially invested, 50%. Cash is king, 40%. So mainly, people are getting less exposure in the market, and trying to go into more cash or build up some cash pile to get to buy the dip. So I think right now it could be one of the dips that you want to buy, but it might be also fearful where when and also the outcome of the election. So within this period, if you still want to position yourself, you might want to go for those very strong fundamental counters ahead of the election, because there is already one dip. If going forward, the election date is out, there is a certainty, because even let's talk about the election. Yeah, maybe we can put this out. Yeah, okay, we can put this out for them. When is the likelihood of the G15? Before we talk about the G15, let's do one poll here to talk about, will it be end October, will it before mid-November, or after mid-November, or is in December? Okay, so let's do a poll, because right now we have 60 days. We don't know when is the election. So that's why people want certainty. So if there is no certainty on the timing on the election, people will not trade. So that therefore you put more cash into your hand. Yes, that's right. But if there is a certainty of the dates already, then perhaps there is already one, bird that is being killed. So we have to wait for another one. So let's say the election outcome is already known. Then we have being checked the second one. Then we can fully focus on investing. So right now, because of dates, it's not sure, because we don't know whether is it 10 days, then they will call for election, or 20 days, 30 days, or even until the 60th day only they will call for election. So within the 60 days, there is still transitional period that you will be susceptible for the external forces, such as interest rate hike in the CPI numbers, the GDP numbers, and things like that. So you might want to not you might not want to risk yourself at this moment, because you are still not sure about the date. But what if the date is 10 days from now or 20 days from now? Then there's some certainty, so that therefore you will be putting your money into the stock market by then. Okay, so yeah, maybe you can later on we'll talk about the likelihood of the G15. I just want to gather the audience, the wisdom of audience, so that we know that maybe you have some insights to where some people talk about some rumors, or some insiders talk about the election date, and we can roughly gauge some sort of whether is it true or false in terms of the dates itself. Okay, so before we go into that poll result, maybe we just talk about the stock picks. So basically, we have ATAC, we have the stocks ATAC, CCK, Gamuda, Hexstar, KGB, MyG, Optimax, Pekka, Semiden, Scomnet, Sign, Tiguan, and Timecom. We just want to go through one by one if we have time. But again, I just want to mention to you, these are already being published, and it is already in our website. And these topics is already there. I just want to mention that these companies are decent companies, because they are already growing in terms of their earnings, or they have very strong expansion plans that could actually continue to fund their earnings going forward. So for ATAC, I think they are going for further expansion, and they will boost their capacity, going forward until end 2023. Then we are also anticipating this under the green energy tech related energy one-stop solutions EMS provider. Therefore, it is part and parcel of tech, and they are export oriented. So basically, we can say that it is considered as a good, healthy company for fourth quarter. Just that the sentiment might not be great. Even the US Wall Street is actually coming off, so that might hammer their share price down. But given that their share price has been recovering since 1 ring and 34 cents, forming the double bottom formation and a breakout trend line here 166, I say that this could be a good opportunity to buy around 166, 167 level. And that would be maybe potentially going up even higher towards 218, 228 when in the mid to long run, we should be able to see that position. Okay, so I'm anticipating that the earnings in November will be, or earnings in December will be decent, and that will boost the share price going into that month. But right now it may have a dip, but once there's a dip, it is not breaking below the 166. I would say that that could be an opportunity for you to buy up some shares. CCK is still very resilient. They are making acquisition into one of their prawn processing farm, and this is exports to Japan, and that should come in to their earnings in 3Q 2022 onwards. And the demand is still very much strong because of the reopening since April, and going forward, we should be seeing F&B outlets continue to grow. And share price has been quite steady in terms of the breakout since 50, 60 cents. It has been hitting 60 over cents level, and we should be anticipating further upside towards 72 to 76 cents level. Okay, for CCK, Gamuda is definitely one of the beneficiary under the budget or even election, even though they are not, if they're sort of neutral to the election as well, and because they have a very strong outstanding order book of about 14 billion, and the highway sale is going to garner them some good cash, and also that could give out as a dividend, and also they can also offset with their offset with their borrowings. So that is a win-win situation for them. They have cash pile, which means that they can actually take up more projects going forward, because they are not highly geared up. So which means that if government has some contracts that need to tag along with the public listed companies balance sheet, they can do that. So Gamuda, IGM, Sunway, they are quite decent as a main contractor. So I think they are still in the in a very good position to run higher towards at least 447 or even 466. Even today, they didn't drop that much. It's still in a positive region. Okay, so Hexstar is diversification into specialty chemicals, and that has been giving them some good revenue since then. And also they are consolidating in its foothold in Australia and also New Zealand, and they are also venturing into oil and gas segment in terms of this specialty chemicals. So basically, we are thinking that more business, more expansion plans, which means that more earnings for them. So you can see the share price didn't drop that much early on, around 160 level. Right now it's about 178, but today it dropped about 174, 173, but it's not too worrying. So I'm still anticipating eyeing on around 2 ringgit level, 2 ringgit 15 level for now. KGB record order book that can sustain them for another 3.6 years. They are also moving into high gears because their expansion plan in terms of their clients are actually expanding. So that's why they can see that you can see that their order book is in a record position. And so semiconductor is definitely likely to slow down, but at the same time, a lot of expansion plans are also being seen throughout this period. So which is which, I don't know. But again, we will look at the numbers. If the numbers is great, then I would say that the KGB still have chance to continue, which currently they have a lot of order books that still haven't delivered yet. So once they deliver, they can have more earnings ahead of them. Okay. MyEG is one of the very sticky government-related services company. We believe that even up and down of change of government or no change of government, they wouldn't being affected by their the business environment. It's still the same. You still need to renew road tax, pay your summons and things like that. So throughout the past two times of change of government, they have down by a lot, but from the bottom, it has risen about more than 100%. So I would say that if there is a change of government, this will be falling, but I'll be buying because it is showing signs that their business is unrelated of this, is neutral of this government, okay, or whoever government that is in place, okay. So Optimax, we are running on the expansion plans and also some medical healthcare, medical tourists that comes in for this kind of services. So Optimax is a leading eye specialist. Therefore, we are still anticipating that there are still good ongoing going forward with the earnings coming in very intact going forward. I would say that during MCO period, they are being affected because a lot of people postpone their surgeries. But right now, a lot of people are resuming their surgeries, and therefore that is a very strong backlog orders. I would say that those are the postponed surgeries that will need to restore, and they will see a strong growth in terms of their earnings going forward. Pekka, just now we have mentioned about the automotive sales that will contribute a strong automotive sales will be coming in throughout the next half of the year because of the during June 30th, government has already stopped the SST waiver, and that has contributed to a rush in terms of buying automotive cars throughout that period. And they can't deliver because right now a lot of chip shortages and deliveries are being stopped or even take a pause. So you need at least 6 to 12 months to take your car. So deliveries will be next 6 to 12 months. So that's why the earnings will be coming in by then. So Pekka is being a leader in automotive leather upholstery space. And I think that's where when the spike in terms of the sales, that will contribute to the strong numbers for Pekka going forward. Okay, and also Pekka, don't forget about MCA has some stakes in it, so it could be also election team as well under for Pekka. Okay, St. Maiden, we thought that more and more of this EV renewable energy can actually been seen in the sort of budget, but it's not much, but it's still not too negative yet. But bear in mind, we are looking into subsidies rationalization plan going forward. Okay, so assume that some parties has been winning has been taking over as a government. They would do the subsidy rationalization, which means that tiering basis of subsidy being given to the citizens. So maybe B40 will get the most, M40 will get lesser, and T20 will support the rest of the population. So that is the idea of subsidy rationalization. So in that sense, people might go into rooftop solar panels. So that could be contributing to another stage of potential earnings for St. Maiden. Okay, Scomnet export oriented. Their medical segment is they're doing the medical products and devices in the US. So they're exporting. So definitely post COVID, there will be a lot of medical devices need to be built up or even manufactured. So that is where they have contributed to a very good earnings so far for now, and they have been revising their price since August. So that would also contribute to better earnings going forward. So which means that price revision, revenue higher, earnings should be higher. Okay, so that is the idea on that. Sign Signature is also decent because of their outstanding order book. Because Genie has actually bought into Signature. Some stakes in Sign, and also they can actually cross sell Fiamma's product. Okay, either they cross sell their products to Fiamma's network, because they proposed acquisition of 23.7 in Fiamma, and that could actually give a very good foothold in terms of the electrical home appliances. Right now, they are already doing the kitchen cabinet, but what if they can do other things as well? So that could be contributing to further earnings for them. Okay, so but what enticed me for putting this in is because of the order book stands at about 500 600 million, so that is likely to contribute for the next 1 to 3 years earnings going forward. So I see that as strong catalyst and still strong resilient orders going forward. Okay, Tiguan, export oriented. Plastic is needed very much in everywhere. It's actually the best invention of the century, they say, plastics. And although you say that we need to recycle, we need to use less plastic, but during COVID, there isn't any issue of people using more plastics. So going forward, I still see that is a very sticky, product for people to use. So they are always selling to exporting to Japan. So given that resin prices is on the way down, that could also boost their margins. Okay, so that is Tiguan. And Timecom. Timecom has few segments. One is the retail, one is the commercial office, and the other one is wholesale. Okay, so the retail segment has been expanding because during COVID, a lot of people upgraded their services to higher bandwidth. They have been rewarding their shareholders 16 cents dividend per share. The wholesale is actually the part whereby they need. The 5G rollout will need to build on their backhaul services. So that's where when 5G is rolling out, they will tap along with TM's backhaul and also Timecom's backhaul. So that basically their structure is ready and it's a prerequisite for the 5G infrastructure build out. So basically, when this when we put in this timecom, it is because of you know, that reasoning. We want to tap along with the 5G or even Jandela or whatever telecommunications projects that is going to announce during the budget. Okay, so that sums up my strategy. Let's go into budget. But before going to the budget 2023, I will talk about. I would just need 5 to 10 more minutes only. Okay, so bear with me for another 5 to 10 more minutes because we are going to talk about budget and also what my view on the GE15. And yeah, just now there is you know, the poll. Let's take out a poll and see what is the answer. So 5% would be uh, end October. 5% is talking about end October. Then before mid October, before mid November, 70% of them are talking about saying that, you know, election will be before mid November, and after mid November 20%. Then in December 5%. So basically, people are anticipating that within 30 days, okay, within 30 days, there will be an election. Okay, so basically, if you have this timeline, so you can position yourself based on this timeline, at least that you can, you know, gather the situation nicely. Because if this is going to drag to 60th day, 2 months, you have a lot of CPI numbers throughout. You have a lot, some GDP numbers. You have some two meetings of this, Federal Reserve. So if they can, you can minimize your risk into 30 days. So you will position yourself based on 30 days time frame, and that is good because once the election date is done, you will have some knowledge of what is going to happen, and you have to position yourself, by when you should buy this and that. Okay, so that is the idea of why we need this election date. Then the election outcome will be the next crucial mode to invest in which strategy, which sector. Later on, we talk about the G15, some strategy that I can think of for now. Okay, so budget. Okay, let's be frank, because we have issued this budget report on 8th of October, and we have, you know, stated all these neutral, positive, and negative things on this. But right now, since that they have dissolved the parliament, this might be voided for now. But it may also be a manifesto. Okay, the become a manifesto for G15. So assume the current government is the one that is going to position themselves for the election in another 30 days. Then these are the things that they are going to roll out, right? So this can be also being a catalyst to pull the voters to get the votes. Okay, so construction, higher development expenditure. That's a good thing. Then we saw that 25% increase, you know, in development expenditure, so which means that a lot are being seen maybe in the construction sector. Consumer definitely is because of the high cash assistance is positive. Technology related incentive from the for a lot of incentives being given for FDIs to come in to attract, you know, direct investment from foreigners. Telco is also positive due to the Jandela and also 5G rollout. So that's why you can see today, Timecom and also TM is actually going up. And also the news being out, you know, everyone is having a stake inside, except for, you know, Maxis and U Mobile. And healthcare sector is also positive because of the higher education. Automotive is somewhat positive, and because of the EV and also charging stations, things like that. So the new growth factor will be coming from the EV side, okay, instead of from the conventional cars. Although conventional cars still will contribute, but I think the EV will take up some growth going forward. Transportation and logistics, I think positive with the 1 billion maritime fund, and that we can position for Shin Corporation. Last quarter, we did put that into our quarterly market outlook, and we got about 15% for the total portfolio, gains for that particular stock. So we hope that, we are just getting 3 to 5% every quarter. We are quite happy. Okay, hopefully this quarter we'll be able to do that as well. Tourism, very good positive things happening in that space. So with more incentive and also that would actually contribute to tourism sector being positive. Solar EV positive as the GITA exemption on this tax, GIT tax extended, so it is positive for them. Property is somewhat neutral because of there is not much initiative on that. So I just summarize all this in a few things, and some surprise in is this multi-tiered foreign workers levy. I think this is a short-term pain and long-term gain thing. I would see that plantation, construction, and also some of these EMS player or technology stocks will maybe be short-term negative, but long-term wise, it is going to be positive. And for M40, it is a positive thing, 2% reduction in income tax, and also M40 e-formula initiative. That is also sort of positive thing, but it's coming as a surprise because didn't know that they could also offer this to M40 as well. Okay, so overall, I would say that that budget is somewhat a manifesto, okay, a manifesto for G15 for the current or the previous government, okay, and therefore you somewhat know that they will continue with the higher development expenditure, so that therefore you can go into construction, you can go into telco, you can go into a very sticky government related services sector. So budget 2023 may not be may not be useful, but they can be a manifesto. Therefore, you can use that as one of the guide for you to invest, at least for the next 30 days or even upon 30 days. Yeah. So on general election wise, just now we have mentioned that some people have mentioned maybe within 30 days we will have this election, and therefore we should be focusing on defensive characteristic companies, solid balance sheet, high net cash. I think that is what I mentioned always. Strong dividend paymaster, stickiness of services, neutral GLC, such as MYG. I think is very neutral because all this while they have been going up. Then until this recent 2 times of change of government, they have been fallen quite a bit, quite strongly. But from the bottom, they have risen more than 100%. So what I want to say is that because of the resiliency of their business model, they are not really depending on which of the parties to win the election. They are neutral. Therefore, the stickiness of services will continue to make them grow in terms of earnings. So next, we will look at growing earnings companies. So I think as long as companies that seen some growth in terms of their earnings throughout the past 2-3 quarters, that is one of the criteria that I would use to select counters or filter counters. Okay, so that is all that I have. If you want to have Q&A section, I will take 5 minutes to take your questions and see if there is any questions. If not, then we will call it a session. Then we will end this session right now. Okay, I'll just take 5 minutes. Okay, 5 minutes. See whether we have any under this comment section. We have any questions or not. Okay. So in summary, I would say that this quarter is very challenging because we have the high inflationary pressure. The interest rate hike is still not end yet. It's still not ended yet, and that too has contributed to how we position ourselves. But at least high interest rate in terms of US side will contribute to US dollar increasing in the strengthening in the strength of US dollar, and our side will be on a weakening path. Therefore, that has contributed to one of the element that could lead us to looking at export-oriented counters. Then the budget will also position ourselves for the next course of actions. Such as construction sector may be one of them. So that is why I put in Gamuda. Gamuda is also a growing company, have a lot of has a lot of cash that can government can tap along with the listed companies' strength in terms of that balance sheet to build maybe MRT3 or even new projects. Okay, so then telco, we like telco as well. So basically, budget is also some prelude to things that could happen after the election. So sort of give us an idea to our factors, elements, and team. So I've crafted this factors, element, and team because I think it's very important to know what and why we are investing into, and what sort of factors that this company are being affected that contribute. Okay, so just now there is one question about the 10 years and the inverted yield curve. I'm using the 10-year and 2-year. Okay, 10-year and 2-year. So basically, right now we are seeing an inverted yield curve, and therefore that is contributing to potential, sort of, indicator for recession. But it is not conclusive because it can happen in 6 months or 12 months or 24 months. Okay, so that is just an idea. But all in all, what I want to say is that if they are calling a recession, then you should be focusing on buying stocks that is potential. Will the gaming sector comes back as there will be more spending power for before the end? I would say no, because actually gaming sector will will depend. Okay, depends on which gaming sector you are referring to, NFOs or the gaming as in Genting Berhad. Okay, Genting Berhad or Genting Malaysia will need a very strong comeback for tourist reach. Currently, the China tourist is not coming in yet. So basically, we still need that factor. Once they open up once they open up to let China tourists to come out, then I think Genting Malaysia will spike, and also Capital A will spike, Airport will spike. So that is just one factor that I'm waiting for. It's not in yet, so that's why this quarter I'm not putting it the tourism into this quarterly outlook. I will wait. I will wait for the next. We'll wait for the news to come out, and once the news is out, then perhaps there will be a new thing that come out. But for NFOs, yeah, NFOs definitely that would help, okay? Because you have more, each one you have 70, 80 ringgit. That is quite helpful for you to buy at least one or two times of these NFOs. So NFOs will back, but the share price may not go up. Why? It's because the dividends that they pay out is let's say 5 to 6%. But if the MGS is more attractive and it's a risk-free, it's a risk-free government bond. People will buy into government bond and less they'll buy into the NFOs. So the earnings will come back, but maybe the sentiment will be neutral. It wouldn't affect the share price to go up higher because maybe 5 to 6% dividend is not attractive under this environment. So you have to understand that which you comparing with. Okay, so where do you see the US dollar MYR peaking? I would say that 470, I would look at one round, 480 round one round, 490 one round, and 5 one round. But I wouldn't, I wouldn't want the US dollar MYR going into that path. But as long as Federal Reserve is maintaining the view that they are continuing their hawkishness, I think US dollar will gain strength and ringgit will continue to weaken. But I think given that scenario, 470, 480, I think is quite stretched already. I wouldn't want to see it go upon 480. Yeah. Okay. So I guess it is already coming to an end. 143 right now. I will do the closing right now. And thank you so much for your time to attending this during this lunch hour. And hopefully that you have a very good night's sleep going forward, because right now until election there will be a lot of ups and downs, and also CPI numbers, and also the Federal Reserve the Federal Reserve meeting as well. So those are the events that you need to monitor to give you a good decision making going forward. Okay, so thank you so much and see you again next quarter. Bye bye.